Welcome back to Gaming in Public Markets, the show where we dive into all things relating to game dev, stock news and beyond. Let's kick off with what many analysts have already called the Great Rotation, a surprising market shift towards mid and small cap companies. For the first time since last October, the Russell 2000 index jumped by 11% in July. This shift from large to smaller stocks is something we at GDEV are excited about. It means a more dispersed focus on a larger number of companies rather than just interest in a few major players. This trend is quite different from the S&P 500, which fell by 1%, and the NASDAQ Composite, which dropped by 4%. In fact, this July was the worst month for major indices in the past 2 years. What's behind this shift? The reasons are clear. Disappointing earnings reports from big tech companies, coupled with hopes for interest rate cuts, have led investors to focus on smaller companies with higher stock growth potential. This trend was also evident among gaming stocks in July. Diversified gaming companies, on average, saw a 7% share price increase, underscoring the great rotation I mentioned earlier.
Hi everyone, I'm checking in from early August while the video is in editing. Something unexpected has happened with the US economy. July's unemployment numbers showed weak job creation and the highest unemployment rate since 2021. This, combined with the fading excitement around AI, and disappointing earnings from major companies has led to a significant market decline in early August. Some analysts are even suggesting the market is entering a correction. So, isn't it the perfect time to look at some less hyped stocks, especially those you are passionate about, gaming stocks? Let's dive in.
The situation in the gaming market is gradually improving, and a sign of this is the first large gaming IPO in the recent years. Korean game developer Shift Up, known for its hit games Stellar Blade and mobile title Nikke, Goddess of Victory, is now a public company. Shift Up floated just 12% of their shares, which was over 200 times oversubscribed, leading to a strong pricing and share price performance. Shift Up's growth has been explosive, with the revenues increasing nearly tenfold in the past 2 years. Their valuation is impressive, with an EV revenue ratio exceeding 20x, reflecting increasing investor interest in the gaming sector. In July, several reports forecasting exciting growth for the gaming industry were published. According to a recent PwC report, global gaming revenue is projected to surpass $330 billion by 2028. That's a 47% increase from 2023 and more than double the revenue from 2019. Mobile gaming is expected to be a major driver, potentially accounting for over 75% of this revenue. On top of that, Sensor Tower also predicts solid growth, with a compound annual growth rate of 7% through 2028. So it looks like the future of gaming is shining brightly. Today, I would also like to mention that GDEV has partnered up with InvestGame, a monthly report that provides valuable insights into the world of game dev investments and deals. If you are interested in understanding the mechanisms and ideas that drive the gaming market forward, be sure to subscribe. It's absolutely free. The link is in the description. Next, let's dive into some individual gaming companies I want to explore in more detail. First up is Electronic Arts, the largest pure-play gaming company in the Western market, which continues to make waves with its dominance in sports games and live services. EA just released their Q2 results, which are interesting to observe. At first glance, it might seem like EA is experiencing a year-over-year decline, which could be quite concerning. But hold on, this quarter didn't see any new game releases like last year's lineup. Even so, EA's live service games are thriving, underscoring the company's impressive strength in this area. The report shows EA Sports FC smashing records with its net bookings, while Madden NFL is seeing impressive double-digit growth. The eagerly anticipated EA Sports College Football has made a strong debut, drawing in 5 million unique players within its first week. On top of that, EA has been proactive with capital returns, funneling $400 million into share repurchases and dividends. Of course, it's not all sunshine. Apex Legends is still experiencing a year-over-year decline, though it's showing some positive sequential improvements. Mobile bookings are also down year-over-year as EA fine-tunes its mobile strategy. Despite these challenges, EA's price target estimate went up by 2% on the day of the earnings release. The outlook of the next quarter is bright, especially with EA's sports-focused games leading the charge. Analysts believe that enhancing other titles like Apex Legends and Battlefield will be crucial for sustained growth over the coming years. Tencent, the Chinese internet giant, has flown under the radar in our previous episodes. We are looking forward to the earnings report in mid-August, so it is the perfect moment to shine a spotlight on it. Besides Tencent major segments like online advertising and fintech services, the company's gaming division is the colossal player, bringing in about a third of the company's total revenue. And guess what? This portion is not only stable but growing, with many analysts viewing gaming as the real engine driving Tencent's financial success. Tencent fully owns Riot Games that operates League of Legends, and Supercell, creators of mobile hits like Clash of Clans and Brawl Stars. Plus, Tencent holds minority stakes in many other gaming companies worldwide, making it a global gaming titan. Analysts are buzzing about Tencent performance for the second quarter of 2024, which will be revealed in mid-August. They are expecting a surge in revenue growth, with mobile gaming leading the charge. Tencent has launched 3 major titles this quarter, and they are already making waves. One of these titles, Dungeon and Fighter Mobile, has been a huge success in China, generating $270 million on iOS platform only within the first 30 days of its May launch. This impressive performance marks the biggest debut of the year for Tencent. Supercell isn't sitting on the sidelines either. In Q2, they released a new title, Squadbusters, which is already showing strong results. Over 120 million of downloads and more than $30 million in net revenue. Additionally, the classic game Brawl Stars has seen a phenomenal year-over-year increase in net revenue in the second quarter, growing about tenfold. Tencent subsidiary has successfully revitalized the game, making it a major hit once again. Given these strong indicators, analysts are anticipating a fantastic quarter for Tencent. Goldman Sachs, for instance, are upgraded its forecast, now expecting a 7% increase in gaming revenue for Q2 and the entire year of 2024, up from their previous 2% estimate. Finally, let's touch on Microsoft, another major player in the global gaming industry, especially after its recent acquisition of Activision Blizzard. Microsoft's latest annual report shows a remarkable 39% increase in gaming revenue compared to the previous year, reaching a record $21.5 billion, with $5.7 billion coming from Activision Blizzard. On the flip side, revenue from gaming hardware fell by 13%, mainly due to a decrease in console sales. Looking ahead, August is packed with exciting events. We are anticipating earnings reports from major gaming companies like Take-Two, Embracer, Tencent, NetEase, and more. For some, this will be their first quarterly report of the new financial year, which could set the tone for the rest of the year. One of the most important events, GamesCom, will take place late August, promising major gaming announcements and 4 days of exciting events. We will be there too, so if you spot Roman, feel free to say hello, he is a great guy. That's it for this episode. As always, I appreciate your likes, subscriptions and comments. Thanks for watching, and see you again soon!